The following program is brought to you by Comprehensive Financial Consultants and CFCI, which is solely responsible for its content. Securities are offered through J.W. Cole Financial, member FINRA, and SIPC. Investment advice offered through CFCI and J.W. Cole Advisors. J.W. Cole Financial, J.W. Cole Advisors, and CFCI are unaffiliated entities. The opinions expressed by the members of CFCI and their guests should not be construed as specific investment, legal, or tax advice. All economic performance information is historical and not indicative of future results. Investing may involve the risk of loss of principal. Any tax advice on this show is not intended to be used by any person for the purpose of avoiding U.S. federal or state tax. Penalties that may be imposed on such person and each listener should seek advice from their tax advisor or legal counsel on topics that arise from the show. The representatives of CFCI and their guests are not providing legal or tax advice, and nothing should be considered as a solicitation or an offer to buy securities.
Hey everyone, welcome to the second quarter tip-off report at Comprehensive Financial. We have Angela in the left quadrant, Ryan Belcher, Wayne Thacker, Doug Hughes, Jared Crow, and of course, Hot Rod Holloway down at the bottom. So we just want to give you a little update on what's going on and where we stand on things today. So I'm going to kick it over to Ryan and Wayne first, just to give you a little update on some things happening here at Comprehensive Financial and what's happening in the world when it comes from a tax perspective.
Well, yeah. So just a reminder, David, that the tax filing deadline's coming up here on Monday, April the 15th. And so as a taxpayer, you'll have to have your return filed or file an extension. And if you do file an extension, make sure you pay what you think you're going to owe. Otherwise, you may have a late penalty or interest on any unpaid balance. And then also, if you want to make an IRA or Roth IRA contribution for prior year, you have until April 15th to do that as well. So as a reminder there, the 2023 maximum contribution amounts were $6,500 for IRAs and Roth IRAs if you're under 50, and those that are 50 and over, the limit is $7,500. And also remember, you have to have earned income in order to make an IRA or a Roth IRA contribution. And then Wayne, if you have any old tax documents or old statements that need to be discarded, we have a solution coming up for that as well.
Well, we've called for sunshine on Thursday, May 2nd. We're doing our annual Shred Day event. Come out, throw a football with us, or just drop off your old documents for us to shred them. We'll have the shredder truck right out in the parking lot, and you can just drive on through and pass your bags out the window. And again, that's Thursday, May 2nd from 2 p.m. to 5 p.m.
Always a really popular event for everyone in the community. So let's talk with Rod now. Little recap of first quarter, kind of a crazy quarter to say the least, and what we see coming up for the next quarter, Rod.
Sure. Yeah. So first quarter S&P 500 up 10.5% for the quarter. That's back-to-back 10+% for the quarter. So fourth quarter of last year was over 10. First quarter of 24 over 10. I think 8 times since 1950 have you had back-to-back 10% quarters. So not something that happens on a regular basis. You know, we've really come out of this gate hard, and the market is really feeling good about the Fed eventually cutting rates. And it seems to be a big part of what's juicing this. Not that earnings and stuff haven't been solid. We've continued to see solid earnings. But it is one of those that we are moving at a pace that we need to slow down and pause. Pause doesn't mean disaster. Pause doesn't mean a massive sell-off. It just means things need to catch up a little bit. We're probably getting a little bit ahead of ourselves. The market has had a disconnect between it and the Fed and the expectation. So at the start of the year, or right before the year started, the market expected 6 or 7 rate cuts for the year. Now, as we finish this first quarter, the market has settled into accepting probably around 3 rate cuts, hoping the first one will come in June. Fed Chairman Powell hasn't thrown any cold water on that. As a matter of fact, Fed Chairman Powell has kind of stuck to his guns at his recent talks that he's had, that most certainly 2024 is the year that we will probably start cutting rates, and that 3 isn't out of the question as far as he's concerned. Other Fed members, though, have in the last week and a half or so have been out talking that maybe only 1 or 2 and potentially none, because the economic data that they're looking at, predominantly inflation and the jobs market, are still moving in the direction they want. The jobs market is still very solid, and inflation has continued to decline. We have hit a little bit of a sticky point here lately, but the numbers for this month, PCE, CPI, all of them, they came in right about where expectations were. And the Fed said, even though there wasn't an actual decline, they weren't concerned that numbers came in at estimates, and they believe that the trend is still to the downside, which is why they believe that they can eventually start cutting rates this year and not reinvigorate inflation. They also don't want to stay in what they believe is currently a restrictive territory too long and start to slow this economy down. You want economic growth, you just don't want inflation.
Thank you, Rod. And of course, everyone listening, we work really hard to make sure people understand the purpose of their money. Money you're going to need soon is invested differently than money you need later. A lot of protected strategies are implemented here as well, because it's more important, like keeping what you have sometimes, than actually rapidly growing for most people that are in our wheelhouse. So we are in an election year. Surprise, surprise, Doug. Give people a little bit of what to expect, and at least from a historical standpoint, when we're in an election year.
Well, if we know anything about investing, or have been invested for any time at all, we know that markets hate uncertainty. And so every 4 years, when we come through this cycle where we are looking at the two presumptive nominees to represent the two parties that we will choose from to lead our nation going forward, there is always this look of what policy are they going to come in that's just going to be overwhelming or overtaking where that sector particularly is. But normally those fears are overblown. Normally what happens in an election year is that volatility picks up and people become a bit anxious about it. But by the end of an election year, historically, the markets are positive, and certainly a year following the election, all history points back to a positive return over the next 12 months. So as you know, we are all well aware of what's going on around the world and in our nation, and Rod highlighted it very well. We do know that markets don't like uncertainty, and we're looking forward to coming through this election cycle and knowing some steps going forward. But the main theme is to maintain your asset allocation, remain invested, widely diversified, don't get over worried about one sector or another, and do the things necessary to be a very prudent steward of your capital and investments.
Thank you, Doug. So we just want to say thank you to everyone for the trust and confidence you have placed in all of us, and that we are here to help. If you have any questions, concerns, please reach out to your advisor, your team, and we'll be able to answer and help guide you through whatever it is you're going through. If we haven't talked to you for a while and you think we should be talking with you, please reach out. We went through that 2020, 2021 timeframe where a lot of folks weren't getting individual meetings. We really cranked that back up in 2022 and 3. And now we are in 2024, believe it or not. So please reach out to us if you have any questions or concerns. And from all of us and the rest of the team here at Comprehensive Financial, hope you're having a great year so far, and we'll see you again next time. Bye-bye.
The preceding program was brought to you by Comprehensive Financial Consultants and CFCI, which is solely responsible for its content. 674 South College Avenue, Bloomington, Indiana. Securities are offered through J.W. Cole Financial, member FINRA, and SIPC. Investment advice offered through CFCI and J.W. Cole Advisors. J.W. Cole Financial, J.W. Cole Advisors, and CFCI are unaffiliated entities.